Hey everybody, it's me, Gregory Mannario. This is the second video I'm doing today. I want to talk about some opportunities here, despite the fact that this market may suffer some losses in certain sectors. There may be opportunity in others. For example, we had the Hillary bump, the Trump bump, the Dow Jones Industrial Average went up and up and up. The tech sector sold off. Those of us that got involved on that short side, for example, Microsoft, I suggested, and I told all of you I was short Microsoft, but did phenomenally well. Now, we've seen a lot of cash leave tech. So, there is the distinct possibility that there is some opportunity here in tech, and it may have gotten ahead of itself. So just because the overall market, let's say, it takes a hit, doesn't mean that every single stock is going to take a hit or something else is going to go awry. So this is why in the video that I did yesterday, I said you need to be a picker. You need to pick stocks. For example, you might want to look at Intel. You might want to look at Apple. Use the evolution system to tell you what you should be doing. It's that simple. So again, just because the market may take a hit here doesn't generally mean that all stocks are going to fall. I think there's opportunity. This is what separates, so to speak, the men from the boys. And this is why I said yesterday, don't go crazy getting involved in an entire sector or an index. Look for individual opportunities that seem to be, let's say in this case, the tech sector looks like it took a hit, but I still would not go ahead and buy, let's say, Triple Q or any of the ETFs that cover the whole sector. I wouldn't do that. I would look for individual stocks that look like they got beat up, and take up that initial small position, see where it goes. If you're right, you add to it, maximize your gain. It's a beautiful thing. If you're wrong, no big deal. You close it with a small loss. This is what we do as traders. This is what we do as speculators. Let me just real quick cover what's going on here with gold and silver, getting hammered, no doubt about it. But again, these are not trades. These are investments. So I think this is a buying opportunity in my opinion. And it's not real. We know it's not real. So stop thinking it's real. The paper derivatives are fake. Fake. And how do we know that? Let's just look at the most recent escapade with the Deutsche Bank paying a fine because they're admitting they're manipulating the metals markets. So forget about it. If you're going to get all shook up here about what happens in the paper derivative, you're in the wrong spot. You should be, I don't know, investing in collecting antique cars or something. I don't know, but you can't do this. And I've been saying this for years and years and years, but people just don't listen. They don't get it. So let them do what they want. Let them manipulate the price of gold and silver. It doesn't matter to me. It doesn't matter at all, because the longer-term outlook is still pretty damn miserable with regard to the global economy. And we got to watch this bond market. And like I said in the video I did earlier today, look, just because we could have a sell-off in one sector that could pull down the Dow or the S&P doesn't necessarily mean we're not going to have opportunity, because there always is. Anyway, I hope I covered some important things for you here. I want us all to make this work for us. And we can. There's no doubt about it. Opportunity abounds. Let's take advantage of it. With that said, over and out.